How's it going, guys? Welcome to another video. We're going to be going over the most anticipated earnings for next week, as well as 4 options plays and 4 stocks that you should be watching for next week. And as you can see on our screen, there's not that many companies reporting earnings next week, but there are some good ones that we have in mind. So the first one obviously is going to be Carnival Cruise Lines reporting earnings Monday before the market opens. So this means that when the market opens, their earnings has already been reported, and the price is going to move whatever direction it goes in. So Carnival is sitting at $18 per share. Had a pretty nice run up last Friday, in anticipating for some solid earnings, but due to the Omicron virus, it does seem like that forward forecast might be a little bit down. So there might be a little bit of a pullback from Carnival stock, and that's really when we're looking to get in on the stock. If the stock drops on Monday, then we will be either buying shares or selling some cash secured puts. As you can see here, I'm selling some cash secured puts at the $15 strike because I don't mind owning shares at that price point. So that is going to be pretty nice. And if the stock drops even more, we can sell some more puts or just straight out buy some shares of this company. For the long term, it's going to be pretty good. Once the whole pandemic business is over, the stock will definitely recover back to its highs of around back to pre-pandemic highs of around $40-50 per share. And that's really what we're anticipating for the long term as a recovery play. Next stock is going to be Micron, reporting earnings Monday after the market closes. And Micron, just like AMD, has been on a pretty nice uptrend the past month. As you can see here, this nice run up kind of followed AMD, and semiconductor companies are really going to take off in the future. So it's a great long-term hold. So an options play that we could do is to probably sell like a month out and sell some puts. Honestly, don't mind getting assigned at some price points. Like a $75 cash gear put collecting $200 of premium is going to be pretty nice, expiring in 1 month. If you want to do a shorter expiration, you could do like a December 31st. You won't be collecting as much premium, but the premiums are still pretty high. $75 cash gear put, you're collecting $110. It's pretty much a win-win situation. If the stock drops below $75, you just own 100 shares. Otherwise, you just collect your $110 of premium in full, and that's going to be pretty sweet as well. So the next stock on our list is going to be BlackBerry, reporting earnings Tuesday after the market closes. And it is going to be a shorter week because of Christmas, so we only have a 3-day trading period. And BlackBerry has increased last Friday due to AMC reporting blowout box office numbers for the Spider-Man showing. So all the other meme stocks, including GameStop, BlackBerry, have been on an increase last Friday due to the 20% stock gain for AMC last Friday. So we can then see some BlackBerry volatility along those other meme stocks. So if you want to get into this, buying some calls may be pretty good, honestly, for some gambling plays. Maybe like a $10 strike, and something can cost you $65 of premium. So that's very cheap, less than $100 for a nice little gamble. And a January 21, 2022 expiration date is a month out. So it's giving yourself a decent amount of time. And that's really what you want to do when buying call options. You want to buy at least a month out, give yourself the most time possible for your stock to play out. If you want to sell some puts, you could do as well. And selling cash secured puts is a neutral bullish strategy. As long as the stock price stays above your strike, then you make your full profit. And we can go pretty far down the strike prices, as we can see here. A 7.5 strike gives you $27 of premium. That is quite a bit of return. That's about a 3% return in 1 month if you want to do that. And if the stock drops below 7.5, you just have to own 100 shares of the stock. So that's a win-win situation. And the last stock on our list is going to be kind of a riskier one, Cognite Software. As we can see, it IPO'd recently, this year actually, January late January 2021, and it's been on a slight downtrend. Market has been pretty shaky, and that's kind of why the stock has been down. It isn't an Israeli company, so we have to keep that in mind as well. So we don't know too much about it. But what they do is they do security analytics software that empowers governments and enterprises with actionable intelligence for a safer world. IT software accelerate investigations and identify, neutralize, prevent terror, crime, and cyber threats. It's a pretty good, it sounds pretty good on paper, but it's not a US company, so we don't know too much about it. But if we want, we can sell some puts. It is going to be a bit riskier, as we mentioned earlier, and there is only monthly expiration dates. So what I'm looking at is kind of a safer play, a $15 cash did put expiring January 21, 2022, and it's going to give us a chance of profit of 85%. So very high chance of profit, and it's giving us over a 1% return. To be exact, we can calculate that right here. That's going to be $25 of premium divided by our collateral, which is going to be 15. It's actually going to be 14.75 because it's the collateral minus our premium collected, which is 25, and that's a 1.7% return in 1 month, which is pretty nice and it's pretty safe. 84% chance of profit. So that's about it for this video. 4 stocks that we're watching for next week for earnings. Of course, AMC may have some good bullish momentum going to next week as well, but this is going to be for strictly for earnings releases, for stocks and some potential plays. Thanks for watching.